Hello and welcome to Budget Insider. Joining me today is a very special guest, Sanjeev Sanyal, member of the Prime Minister's Economic Advisory Council, to help decode the budget and its after effects on the economy. Thank you so much for joining us, Sanjeev. Pleasure to have you.
Pleasure to be here.
Thank you. My first question is that, this budget comes at a very interesting time. One, it's the last budget of this full budget of this government before it goes into elections next year. And the world has been in turmoil for the last 1 year since, the Ukraine war started out, and a whole lot of other things have happened globally.
Well, I thought we were in turmoil for a lot longer. We had COVID for 2 years before that.
Yes, but I'm not bringing in COVID because it seems certain that, India has battled COVID successfully, and that's the story of the past. But please, you're absolutely right. We've been in turmoil for a long time. Do you feel that this budget fortifies India against some of those, global dislocations that may continue further in this year as well?
So I think a point that we have made earlier as well is that the world is always in dislocation. Once in a while, you get a clear road, but it's very difficult to predict when it will be. So policy making has got to be resilient to random shocks hitting the economy. And you saw that even during the COVID crisis, we were very conservative in our approach. We don't go out on a limb, spend all our resources and so on. So we are quite restrained and systematic in our approach. So this is also true even today. So what we have done is, if you will see, we have done some fiscal consolidation, but not too hard. We have continued to spend more, but on infrastructure. Why on infrastructure? Because, well, on one hand, it has very high multiplier effects in terms of jobs, growth, etc. But very importantly, it also leaves us assets and particularly keeps enhancing our supply side. This is an important thing that in the past, if you remember, people say, oh, India can't come to, the private sector has a problem because India's infrastructure is not up to speed. I don't think you hear that too much anymore. And what we are doing is by systematically expanding out our infrastructure capacities, it means that as and when the world economy provides us an opportunity to grow much faster, we will be able to do that because we have built for it. So, building infrastructure is good from demand perspective, but from a supply side perspective, it's even better. So this is our systematic supply side oriented policy making that we have done. So this is along that. And another element in the same supply side worldview is that we continue to try and simplify things wherever we can. So whether it's, DigiLocker for KYC or slowly nudging people onto a more simplified income tax system, whatever it is, we try very hard to create a system that is simpler and, where the processes are from a supply side perspective better. So this is a systematic effort we do. Not every effort is going to be spectacularly successful, but if you keep pushing along a particular line and be at it, you will see efficiency gains, which we have seen. Even difficult reforms like GST or insolvency and bankruptcy code, we introduced it, they were fixed it, and over a period of time, you get a supply side response that adds up.
Right. Agree with all of your points, without a doubt. And India has successfully kind of managed without going the other extreme of giving away handouts and then pulling back and getting the economy under control. So that's very, very true. You talked about slowdown in potential exports going by, world slowing down because of rate hikes and whatnot. Do you feel that the measures announced, whether it's tax on LRS or whether it is, the changes in import duties, customs duties, etc., do you feel that will kind of play a balancing act between imports and potentially slowing exports?
No, that is a misunderstanding. We don't use our customs duties in any way to manage our overall import bill. The only way to do that is to manage your macroeconomy so that underlying demand is constrained and held within range where our external accounts can handle. So, for example, I talked about all the supply side reforms. Actually, if you take our supply side reforms into account, our domestic economy is more than capable of growing by 8-9% even. But we are not growing at 8-9%. We are forecasting only 6.5%. Last year, this current year, we grew by 7%. Next year, 6.5%. These are well within what our supply side can handle. So why is it we are growing at these rates? Because whether it's the Reserve Bank tightening or the fiscal correction that you are seeing in the budget, we are continuously restraining the system. Why are we restraining the economy from growing at higher rates? Well, for a very simple reason is that you cannot, this is our assessment of how our economy can grow without the help of an external economy where there is recession possibly in many countries in the rest of the world. And so our assessment of how fast our exports can grow, even if they are capturing market share, there's only a limit to how much you can grow in a shrinking world economy. Then you've got to be careful not to grow your domestic demand, and suck in too much imports relative to your exports, and then you will end up with a current account problem. So managing the whole sort of dynamic of your current account means that you have to keep the domestic economy growing at level which the rest of the world can either finance or they can absorb exports.
Talking about growth basically is, there's a wider band this time, 6 to 6.8, and you very rightly explained that there's a conscious strategy of sort of curtailing growth, which is very valid and relevant. But the question I have is that unlike previous regimes, data credibility of this government is significantly higher because it has not only delivered, but it has delivered better than projections, which was unprecedented in previous regimes. Is there a conscious strategy behind that you put in build in conservative estimates and then kind of leave the potential open to beat those estimates?
So we are a conservative regime in terms of macroeconomic management. You saw our restraint when in the risk, even in the response to a shock like COVID. We have the same approach in terms of managing our fiscal accounts as well. First of all, it's not just about beating forecasts or anything like that. It's first of all, you have to be transparent. So you saw a few years ago, we brought all these various off-balance sheet account items, made it clear, look, this is what the accounts look like. So everybody knows what it is and what they're dealing with and how we are financing it. Then, of course, we try to beat the forecast where we can. We again, you will see that again this year we have come. The underlying assumption is is only 10.5%, which is very nominal GDP growth will easily beat that in my view anyway. And so that situation, I think revenue growth will continue to do reasonably well. I think that is sort of part of the conscious effort to show that a conservative, transparent, restrained approach to macroeconomic management pays off, and it has paid off.
Right. Talking about growth, economists seem to be, and let me tell you that the economists for the first time I've heard ever agree with most of the government's projections, whether it is revenue collection, whether it is deficit targets, there seems to be credibility. So you're absolutely right that there is there. But the one thing which I see a debate on still is essentially on growth, because the community is not clear as to whether the world will see a hard landing or a soft landing, and vis-a-vis the impact on India. What is your view on that?
Well, I also don't know. Many of you will know I'm a complexity theory person. So I am anyway very suspicious of deterministic forecasts of the future. My policy my role as a policymaker is to manage the system in a way that we are resilient to random shocks, which can come from anywhere. It could be a war, it could be a pandemic, or whatever it is. So that is one of the reasons we are always retain a fair amount of buffer in the system. This, by the way, also feeds into our willingness to accumulate large amounts of foreign exchange reserves, for which we have at some points been even said, oh, why are we accumulating foreign exchange reserves? It's a waste, blah, blah, blah. So we have this general tendency to create buffers in the system because that's how we view the world as being inherently uncertain. Now, as far as the world is concerned, well, that is one of the reasons why we are being conservative in terms of our forecasts. 6.5% for our economy, although it will still be by far the fastest growing economy in the world, it is still a restrained number. And the reason we are coming up with this is because we do not know exactly how the world will pan out. Now, it's possible the world will do better. How do I know? Maybe it'll do better than that. And then we will take advantage of that. The key is not to get caught into a cycle which you cannot wriggle out of. So creating optionalities and buffers is an important part of our economic thinking rather than trying to forecast how the world will pan out. I can't forecast how the world will pan out exactly. I can say reasonably, however, that at some point in time, the down cycle will stop and the up cycle will happen. When will it happen? I don't know. But by the time that up cycle happens, we should be prepared. Our infrastructure should have been built out. We should have inserted ourselves into the global supply chains in multiple ways using PLI or other incentives. We should have built out the geostrategic networks that we need to sustain a long cycle of growth. Economics is not only about economics itself, but about a wider geostrategic worldview. We should participate in creating the next generation of technological benchmarks. So we have done all the other parts that are necessary, that when the opportunity arises, and it will come, the world doesn't always go down, it goes up also, that when that happens, we should be ready to take advantage of it.
Right. Coming to the fiscal deficit, the government has given a glide path on where it sees the fiscal deficit by FY26. While nobody disagrees with the current year's math and next year also looks achievable, but the last 2 years, 25 and 26, does it look aggressive? And what gives the confidence to the government that it will be achieved?
Well, we have, as you know, talked about lower growth rates now. I don't know whether we maybe we'll beat it this year by growing faster, maybe. But if you're taking a longer period of time, you can have reasonable confidence that you'll get. Sometimes you will also beat it and you will get a good phase. Now, I can't predict when that phase will happen. But I think it's reasonably, given that we have a fairly buoyant tax system now, radically better than what it used to be. And if we get at some point a clear road, our growth will also, and therefore our revenues will also. So both the numerator and the denominator will play into our hands. But as I said, I cannot plan for which date that will happen. So we have been conservative in the immediate term. But the longer term, one can say that we will at some point get a clear road somewhere. But I can't predict when that will happen. And then we will make up the difference quite quickly.
Right. Talking about rural has been in some pain and rural has been impacted, demand has been impacted. Do you see rural, when do you see rural recovery and what are the triggers for recovery in rural?
First of all, it's a misnomer saying rural and urban separately. They are not separate at all. Much of the rural economy depends on urban and vice versa. A lot of the rural economy depends on remittances from the urban economy. Many activities that were considered urban are now become rural. Like factories move into rural areas and the urban landscape expands and so on. So first of all, let me say that rural and urban are not separate. Secondly, a lot of the infrastructure that is being built, let's say highways, or now you'll see the railways also being heavily in. This creates interlinkages with the hinterland, whether it's our ability to move food and agricultural products around. But do remember that the rural economy is already predominantly non-agricultural. Even rural economy is driven by other activities. So whether it's tourism and many other things. So creating connectivity, of course, 5G will be rolled out as the country, but even improving the current network of 4G is good. So all this network connectivity, creating railways, airports, all kinds of other things, basically allows for dispersion of economic momentum. And ultimately, that is what helps. So again, you can clearly see that we have a supply side view of the whole matter. This is not about, we need to help the rural economy, let's spend some money there. That's not how we do it. Create the highways, create the connectivity, improve the railway network, and growth ultimately is a result of that. It is not something you sort of you just pump up by pouring coal into the engine.
Right. Like deviating from macroeconomics, I think one of the things which the startup ecosystem is debating is that they've had a slower year in terms of raising capital in 22, and the angel tax, which is creating a level playing field between domestic and international investors. Do you feel that that angel tax will really lead to some kind of a slowdown in investment activity by private equity or venture capital funds?
So basically, we are creating a level playing field. There's nothing much more deeper than that. We'll see how it pans out. We don't want angel tax to be in any way get in the way of startups. We are clearly very keen on it, and the finance minister in her speech specifically talked about it. But yes, if there are problems, we will smoothen those things out. We do this iteratively. The point is our goals are clear. Obviously, we try new things out. Sometimes they work, sometimes they don't work. When they don't work, we fix it. So we have an iterative feedback loop-based system. We will see how it goes and we'll fix it along the way. If it causes a problem, if it doesn't cause a problem, then that's fine. Okay.
Talking about investment boost, while 33% is absolutely a huge positive, and that's been received very well by all segments of the economy. The belief is that the benefits will not flow in this year, and that till private capex revives or picks up, there will not be a meaningful multiplier effect. Do you agree with that?
So I totally disagree with that worldview completely. First of all, creating infrastructure is a good thing in its own right, even if it has no impact on private sector. Building infrastructure has many multiplier effects on demand and create job creation and so on. It's everywhere in the world and also in India, more than enough adequate evidence that if you want to deploy semi-skilled labor, infrastructure construction is a very good way of deploying semi-skilled labor. And much of this labor, much of this activity happens in a dispersed way. Building a highway and railways or anything is a very dispersed activity, so creates activities across the country. So this is consequently a good thing in its own right. Secondly, as I pointed out earlier, it creates an asset that is also, so there's a demand impact, there is a supply side impact as well. So the supply side impact is an important impact that also is an important thing in its own right, because irrespective of what the private sector does, you can use the highway yourself, you can use the trains yourself, you can use many other things that are being built, urban amenities, drains, etc. These are also used at a first order sense without the private sector being brought into the picture. So that's also an important point. Now comes to the issue about private sector. We keep hearing that the private sector is not investing. I'm afraid that that is no longer the case. You can clearly see the momentum coming back in the private sector, and you're seeing it from first the FDI flows that are happening. That's one form of private sector. You're seeing the domestic companies beginning to invest. You are seeing, for example, the banking sector is lending again in a reasonably aggressive way. Whether it's corporate balance sheets or bank balance sheets, they are reasonably clean, and so there is every evidence that there is a momentum of investment coming back from the private sector. So this idea that the private sector is not investing is actually not true.
Right. No, the green shoots are there. Last year saw a lot of capacity expansion plans, big plans announced by corporates. So that you're absolutely right. Coming to the current account deficit, last year was a brutal year for the markets because of the massive sell-off in the markets. And that is a very key route to fund the CAD. How do you feel that the current account deficit has also been trending higher because of reasons we discussed earlier? How do you see that this year, given that, given the markets again looking choppy, do you feel that are we equipped to kind of defend that kind of a sell-off potentially this year as well? And its impact on the twin deficit?
So first of all, be clear that our current account deficit is something we do actively look at and want to restrain to a certain limit. And part of our macroeconomic conservativeness is related to the current account deficit. Of course, some part of the current account deficit should be allowed, because in the end, the current account deficit is the difference between your investment rate and your savings rate. You can't say, oh, we should ramp up our investment rate, particularly from the private sector, and then complain that the current account is not widening. Question is, are you getting financing for it? Now, there are two sources of financing. One of them obviously is the FDI, and that continues to be very healthy. Of course, portfolio flows by its very nature are choppy. So yes, on average, over long periods of time, great source of funds. But at any one point in time, you should always expect it to be choppy and volatile. That's its very nature. And for that, that is one of the reasons why we always retain a fairly large amount of foreign exchange reserves, so basically be able to smoothen these things out. And we have seen that. I mean, during COVID, there was a period where we accumulated huge amount of reserves. At one time, reserves went to 660 billion. Then when there was an outflow, we let that flow out. We actively allow the foreign exchange reserves to be used. And of course, we allow the exchange rate itself to make some adjustments. So between the exchange rate and foreign exchange reserves, we manage this inflow and outflow. That is precisely why we allow, again, the flexibility is an important part of the story, and we allow that.
Right. So you're not a big cause of concern right now for India as far as that is.
No, we'll allow the adjustment to happen. I mean, supposing the current account is such an issue, then the exchange rate will either adjust downwards, or we will run down foreign exchange reserves to what we think is prudent. So at this point in time, we are accumulating foreign exchange reserves. So if you remember, it went down from 660 billion to 520 billion. Now it's up 570 billion. So the reserves goes up and down, and of course the exchange rate is accordingly allowed to adjust. Between the two of them, we managed it. So I don't think we are. If we were attempting to fix the exchange rate at a particular level and trying to force it, it's a different matter. But we don't do that. Our entire monetary management is based on allowing flexibility on the exchange rate.
True, and that gives confidence to the market as well.
Yes.
That there is no artificial way of either appreciating or depreciating of the rupee. So that gives confidence as well. You're right. Coming to the much talked about subject of the budget, which is the personal income tax concessions which the government has given. Most of the benefits are under the new tax regime. What is the government's thinking? Because when it was introduced a couple of years ago, clearly not many people have moved to that. Even though now it becomes the default tax regime, people may still continue because the perception is that, and it is a perception because the community is also divided on it, where the old regime continues to benefit, where people who claim a whole lot of exemptions. What is the government's thinking, that a lot more people will migrate to it, or that this is giving time to people to adjust and then bringing in the new? What's the government's thinking on personal income tax?
There's nothing very mysterious about what we want. We just want a simple tax system. So that simple tax system has been provided, and over time we will encourage people to move on to it, and therefore over a longer period of time, the sort of slabs and other things that are changed will happen on the new one, and the old one will be allowed to slowly wither away. We understand that people do plan their lives according to a particular framework. Now, we don't want to disturb that. Many of us as well have had a certain pattern of sort of income tax payment, investment, etc., based on a certain framework. Now, it's unfair to suddenly pull that out and put another one in. So we are doing a transition over time, and over time, presumably, the new system will have its own logic. So let people get used to that logic. We will also discover maybe there are some problems with it. We will also be able to fix it. So at some point in time, we will find that people are indifferent between the two. And then one system continues and the other system slowly fades away. Nothing very deep. Nothing very deep about this.
Okay. What about the direct tax code? That was the other thing that has been in the works for a while. So what about DTC? Any chances of it being rolled out, implemented, or now there is no need with the new tax regime?
Well, I'm not very sure what the current state of play there, as I'm no longer in the finance ministry. So when I was there, there was an attempt, there was a group that was working on it, but I don't know currently what its status is.
Okay. Coming to my last question, which is, what about how optimistic are you when it comes to India vis-a-vis the entire environment that we've discussed, how optimistic are you about India and its growth from the 6 to 6.8? Where do you see India settling in for the next year?
Well, I think the economic survey's assessment is correct. About somewhere in around about 6.5%, given what we know about the world economy, is a reasonable estimate. I think the real interesting story about India is actually the longer term story. And not only is 6.5% significantly higher than the rest of the world, India's economy clearly has the capacity of growing even faster. And that is the real trick here. Because basically what we are doing is we are continuously investing in capacities. So whether it's building up the infrastructure and upgrading it, and there are now many parts of our infrastructure that are world class. We will be rolling out 5G. We are even preparing for 6G. Our airports are now world class. Now you will see the railways, large parts of it will become world class as a result of this expansion that we have just funded. And now, of course, we now need to upgrade our cities. That is something you'll see the conversation on that will grow as we begin to, think through how to upgrade our cities. So overall, the idea being is that we need to play in the global scale, punch our own weight on the global arena. We are doing that in multiple ways, whether it is in geostrategic sense or on economic sense. We are making sure that we insert ourselves into global supply chains, and where needed, we provide incentives, PLI or otherwise. And so while we wait for the world to settle, and there will be a time when the world will settle and we will get a phase like you got from 2002 to 2006, you got a phase of 5 years or thereabouts when the world was in a particular Goldilocks phenomenon. From time to time, those opportunities come. I can't predict when it will happen, but it will come. And at that time, we've got to make our best. Those are the years where we should grow at 9% every year and compound it out. But while we are doing that, let's keep things tidy, prepare for it, and make sure that we do not get slip in any macroeconomic way. Because the problem really arises and this is a problem we used to have in the past, is that we were never ready for those big boost periods in the past. We did briefly take advantage of the period 2002 to 2006. We did grow at a much faster pace than before. But then, we fell apart afterwards on the macro, because we didn't manage the macroeconomic side too well after that. And then we had to spend years cleaning up the banks and so on. So the game is clean up the banks, get the infrastructure in place, and then, as they say, the world belongs to a prepared mind. So the same thing is true of the economy. A prepared economy that has prepared itself for itself will get the opportunities will come.
Right. I know I said last, but I'm still going to ask you this question because there is a whole debate around that, and I think you're best placed to sort of dispel some myths. While the PLI scheme, nobody says anything that it's actually been done too late. India should have ideally done this 10 years ago, 15 years ago, when there was a great opportunity, as you mentioned, when the world was in that Goldilocks state. But we did nothing in that period. But how do you believe that this China plus one, how well placed do you believe genuinely is India to capitalize on this opportunity to bring substantial amounts of manufacturing capabilities to India, because the world really wants that? How best placed is India, or is it just a nationalistic thing that we like to believe, or there is real truth in that?
Well, there's absolute truth in it. We can clearly see that. And Apple is a much cited case, but there are many other areas where you are seeing the shift. We are capable of it at multiple. We are the only economy with the skilled manpower for dealing with this. Now we are building out the infrastructure needed for it. We have a common market. People don't realize, GST created a common market. It's a free trade agreement India signed with itself. So that means that many people will come here to manufacture for India and then for the world. So in many ways, we are at a sweet spot. Our demographics is also now just entered into a phase where for the next 25 odd years, we will in the sweet spot. So everything has now the flipped in our favor. Our game is to make sure, first of all, we don't lose our head as far as macroeconomics is concerned. Never try to force growth in any one year. This is about compounding. So macroeconomic stability is sacrosanct. Two, make sure that you do participate in the rest of the world, but protect your interests. We again have done that, whether it's Russian oil or any other thing. Be assertive in protecting our interests. Three, wherever you can opportunistically take advantage of it. After all, I can't predict exactly how the world will pan out, what sectors will rise, but as they arise, as those opportunities arise, whether it's the central government or even better, the state governments, go out there and grab them. And at every point in time, be flexible, because this is the important thing. This is not about trying to plan the next 25 years. This is about having the ability to respond to uncertain things as they evolve out. And meanwhile, try and get two things right. One is, we've got to fix our judicial system so that we can enforce contracts more quickly. That's absolutely the single biggest reform we need to do. And we need to reform our administrative system as well. Most of the progress in the last 30 years has been by shrinking the control the administration has on things it should not have. So basically, reform meant liberalization. But going forward, we need to get our administration and reform it to do the things it should do. For example, municipal services and various other things that governments need, the bureaucracy needs to deliver on. We need to do administrative reform. So the judicial reform and administrative reform are absolutely critical things that we need to do.
When and how do you see them being sort of executed?
So, this is a next 25-year program, so it's not going to happen in one shot. But I think first of all, we need to have a public debate about what is it we need to do. After all, if you go back to the 90s, there was a huge churn of ideas and debates about how to reform our economy. Most of the things that we discussed then have got done and subsequently over time. Even things GST and insolvency and bankruptcy, all of these ideas come from the 90s. They eventually got done in the last few years. So if we begin to now debate these things in the next decade or two, these things will get done.
I think there's one key factor here, that the previous if you look at from 90s right up till 2014, the one standard argument that was given was that didn't have the political mandate. Coalition dharma came in the way of pushing through difficult reforms. This government clearly is not scared, and it's clearly determined to walk the talk. So therefore, since that previous liabilities or issues of the previous regimes are not there, this government has the mandate of people. Therefore, how difficult or easy would it be to execute? And which is why GST got done. It was difficult, but it was still achieved.
So people remember all the very big ones, GST and insolvency and bankruptcy code, etc. In fact, what is happening is actually the routine implementation of large numbers of changes. Opening up of the drone sector, opening up of the geospatial sector, the space sector has got opened up. Removal of all kinds of outdated telecom regulations on the OSP sector. These are small reforms that continuously happening. Introduction of bilateral netting, trade finance getting liberalized. So all of these things are continuously being done. So in fact, much of reform is about continuously doing these small changes, and they are getting continuously done. Now, one of the big things that you may see is, India's patent regime is getting radically changed and expanded. Over the next 18 to 24 months, you will see that happening. So what is the change that you have seen is that political will and support is translating into continuous system of improvements at the margin at every time. So it's not just about the big ones, it's all the smaller ones, the bells and whistles that add up over time. And that is why we are in this sweet spot. It's all about the small things that got along the way.
So you do believe that the next regime from 24 to 29, do you believe that the government has its work cut out in terms of administrative and judicial reforms?
This is what I would like. Well, I don't know. You have to ask the politicians what they want to do, or the new regime when it comes. I tell you, as an economist, what is it where I think the reforms should be? I have been arguing this for a while. Judicial reform and administrative reforms, absolutely critical.
Got that. That's enough and more to chew on. Thank you so much for joining us on Budget Insider, Sanjeev. As always, a pleasure having you.
Thank you.